What's up, everybody? So today I'm just going to be breaking down my top 3 tips on trading a funded account and preserving that account so you don't lose it. So with the funded account, I'm usually always trying to catch trend moves like this that we see from this to this. This is an ideal trading condition that I love to trade, especially during a funded account, because all I'm trying to do is catch 10 to 15 pips on a 10 lot size and risking anywhere from 0.5 to 1% per trade. And usually if I hit a 4 or 5% during the month, if I hit that in the first week, I'm usually finished. So I would prefer trading in market conditions like this. And if I'm not getting conditions like this and I end up getting conditions something like this where we're in a range just up and down, I usually avoid it and I try to find a pair that is trending, how this pair GBP JP was in my example right here. Let's see. So what I mean by that is, my first tip is always finding a trending market, because the trend is your friend regardless of what type of trader you are. It'll make things clearer, it'll make entries a lot more efficient and just easier to kind of understand. So that's my first tip. The second tip is always go with the trend. Don't go against the trend. Don't try to counter trend, because that's all that is going to do is just affect your psychology and just affect your future trades. So in that sense, is obviously if we're seeing something like this where we just had bullish momentum for a while, you want to just continue just going with that bullish trend. So I'm gonna take this box out, and what I mean by that is, let's rewind and say we're right here. So we're currently at this right now. So me on a funded account, I am gonna wait till these highs get broken on the 4-hour candle. So I'm just gonna sit on my hands and just wait until I get a clear close above these 4-hour candles. So one 4-hour goes, boom, the second 4-hour candle, it closed above these wicks right here. So what I would do is, all I would do in this situation is literally line my fibs of that 4-hour candle, that break of that candle. And this is a strategy that I use on my funded account. And in that sense is that 50 and the 61 zone is right in the line of that previous resistance. So I just drop down to my 30-minute chart and I wait for a retest back to the 50 and 61. And then I have one of my favorite moving averages, which is the 8 moving average, and I wait for the 8 moving average to be respected. So I just wait. I'm waiting. Okay, so we got this kind of candle right here. This 30-minute candle, I know it didn't engulf this bearish engulfing candle, but we're still rejecting. We hit the 38 level and the 50 level, and we closed above the 61, and we're closing above the 8 EMA. So in this situation, I would enter right here at 147.51 with my stops at 147.34, which would be around 17 pips. But before I would enter, I have to ask myself, is TP1 a reasonable risk to reward ratio? So TP1 would be around 16 or 17 pips, because I would just try to catch it to 100 or these highs right here, which is around 16 to 17. My stop loss was 16 to 17. In my mind, I'm thinking, yes, it's a reasonable trade. We had a strong 4-hour push. The previous 4-hour candle was also very bullish as well too. So I believe that we can keep pushing. So in that sense, I would enter this trade, and let's see how this plays out. Boom, my TP1 is already hit. I've already closed my trade right here for 17 pips. And within maybe a few hours right there, you would be up around, I would probably be risking about like a 7 lot size. So you would be up anywhere from 1,000 or a little bit over 1,000, about 1%. So that would be my just trade for the day. And then I would just look for a new setup, and I would go back on the 4-hour. And now I'm waiting for these highs to get broken. And I'm not going to keep doing the simulation, but that is the example that this is an example of how I would trade a funded account.